Traders, Anthony here. I'm going to show you two trade ideas. Now the first thing I want to point out is this. If we pull a line through here, notice how price has been trading back into this level. Now we've traded out. This is really overextended here, and it's a possibility this looks to head back into the mean. So I'm going to show you two trade ideas. One is riskier than the other. They're both valid. It's a bullish trend. I have a rule of thumb. I'm looking for price swings. So if we pull this from low to high, retrace, pick up the Fibonacci, low to high, I'm looking for the pullback into this 50 to 618 level. This has already pulled into this level. Now I'm actually long at this point. I'm in this trade. And there's a risk here. There's a risk because this could look for a deeper retrace. So you want to weigh up whether you jump in here, 4-hour time frame, you run with the strategy, which is you look for the previous order block or balance area, and you go in at the 61.8 fib, and that's well and good. But understand the risk, because if we go out to the daily time frame and we're running with the same strategy, we're looking for the fib retrace. Here we have on the daily this swing low to swing high, and if we pick the fib up, swing low to swing high, our entry point on this time frame is going to be down in here. So here's an idea for the daily time frame. I would go stop loss under this previous daily candle, and the target I'm going to be looking for. See how we've already taken out these stops above here? Well, the next port of call is buy stops resting above these candles, and there's a target. So we pull that up to our target, and we have a 1 to 3 risk reward on the daily time frame. So that's quite nice. There's a 3-hour risk reward. Now the question is this going to pull back that far? Maybe, maybe not. So we run the risk here of missing out on a trade opportunity. So then we go down to the 4-hour time frame. Hence my two trade ideas. So on the 4H, we'll keep this here as our daily time frame idea. Now on the 4H, I'm going to be looking for trend continuation. And again, my strategy is pulling a swing from this balance area low, this bullish order block here on the 4H, down, grab the fib and low to high. Now on the 4H, this is my trade setup. I'm actually in this trade already with a much tighter stop. So stop under the previous balance area low, and there we have 1 to 2.4. Here we go. So 2.4R. So there's two ideas that you can play with. Now I'm already in this trade at slightly above this pullback with my stop under here, and I'm willing to take this risk given the momentum. But you got to understand the risk. It can pull back. It may or may not, but I don't want to go in here with a stop loss way down there. That doesn't make sense, right? So I'm going in with a tight stop under this balance area. I got my 2R target, and I'm good with that. But understand the risk, and this is where position size comes in play, risk management. There's a chance that this gets taken out. It's pretty volatile. So I'm going to go in with a consistent position size regardless. For example, the position size on this trade is going to be 0.2% of my account. Position size on this trade will be 0.2% of my account. Let's say for argument's sake that equates to $100. I'm risking $100 with this trade, and I'm also risking $100 with this idea. So every trade, if we're going to use $100 as an example, the risk is say $100, I'll lose 100, but the gain is 200. And if that's the case, also you only need a 34% win rate if you're going with a 2R target as a standard thing. Anyway, that's it, guys. I'd love to hear your thoughts, your comments. Do leave a comment below. Check out the links below, and there's some interesting stuff there that you might find of value. With that, I hope you have a great day. Safe trading. See you in the next video.